Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, September 29th, 2025, and here is everything you need to know as the markets open for today. Let's kick off with the Wall Street overnight recap. US markets wrapped up last Friday on a high note, bouncing back after a 3-day dip. The Dow Jones finished at 46,247, climbing as strong earnings from consumer and tech names led the rebound. The S&P 500 hit a new record, closing at 6,643, up 0.6%, thanks to upbeat guidance from big tech and easing inflation worries. The Nasdaq also rallied to close at 22,484. Investors were focused on steady US GDP growth at 3.8% annualized, dialing back aggressive Fed rate cut expectations but keeping the optimism alive. Top gainers on Friday included the major semiconductor names and big banks, especially as tech continued to power forward. Losers were mainly in the pharma space, especially in stocks exposed to President Trump's newly announced tariffs on imported pharmaceutical and biotech products. After hours, watch for continued moves in pharma and export-oriented stocks as those tariffs come into effect next month. Switching focus to Indian ADRs, overnight the prominent names showed mixed performance. Infosys and Wipro both moved mildly higher, tracking gains in the US tech sector, while HDFC Bank and ICICI Bank cooled off marginally after recent rallies, reflecting rotation in financials. Tata Motors ADR edged down, echoing auto sector weakness in US trading. The move suggests Indian tech might see some positive bias at the open, but banks may trade with caution. Over to the Asian markets and Gift Nifty. This morning, Asian indices are trading subdued to negative. The Nikkei is under pressure, down in early hours as Japanese pharma and exporters react to US trade news. The Hang Seng and Shanghai Composite are both weak, led lower by tech and export-oriented names. Gift Nifty is indicating a soft start, quoting near 24,600, a clear sign the Indian market could open below last week's close. Traders are wary of tariff-linked volatility and the broader risk-off mood across Asia. No major positive cues have emerged from Asia so far, with most markets reacting to US policy and currency swings. Now for key global news and geopolitics. The big global trigger is US President Trump's fresh round of tariffs, which target a range of imported goods and have stoked volatility in both pharma and manufacturing names worldwide. The dollar's strength, hovering near 150 yen, and a rally in gold underscore the cautious global mood. Wall Street's closing action, combined with ongoing debate about US government spending, is keeping equity volatility elevated as we head into the new week. Keep an eye on any new messages from President Trump's social accounts, especially regarding India or China, as these can swiftly impact markets. Here's a look at Indian market headlines and pre-open cues. Domestically, investor sentiment remains cautious after 6 consecutive sessions of declines in the blue-chip indices. Foreign investor outflows continued last week, driven by global risk-off sentiment and sector rotation. There's chatter around potential tweaks to SEBI's F&O regulations, so derivatives traders should stay alert. IT and pharma stocks may remain volatile, tracking global sector swings, and watch for movement in FMCG names as rural demand comes into focus with new sales data this week. For technical levels and trading setups, immediate support for Nifty 50 is placed at 24,600, with a lower guard at 24,400. Resistance to watch on the upside sits at 25,000 and then 25,500. Bank Nifty has support at 54,000, while 54,900 forms resistance. Both indices face negative momentum but watch for a relief bounce if support levels hold. A breach below these zones could trigger further selling pressure. A quick look at the commodity market. Crude oil is trending higher, supported by Middle East supply jitters and firm US economic data. Gold is rallying above key levels as safe haven demand spikes. This could translate into continued FII outflows from emerging equities. Silver is up in dollar terms for the 4th straight session, while base metals trade mixed on global growth concerns. And finally, today's actionable idea or day plan. The prevailing market mood is cautious. Consider adopting a sell-on-rise approach in weak sectors like pharma and select autos, but look for tactical buying opportunities in oversold banks and index heavyweights if intraday rebounds materialize off support. Keep risk tight, avoid high leverage, and let technical levels decide the day's trades. That's all for this morning's update. Stay tuned for the evening wrap and send in your questions or feedback. Wishing everyone a focused and profitable trading day ahead.